Now let us take up multiple choice question, which is coming from July 2024. Priority Limited is a large company engaged in the manufacturing of terry towels, making steady profits on year-to-year basis. PMR Associate Statutory Auditors of the company since last 2 years are in the process of establishing audit strategy for conducting statutory audit under Companies Act 2013. So for the year 23-24, the company has got 5 branches which are audited by independent auditors appointed under the Companies Act 2013. It also has a wholly owned subsidiary company which is audited by another audit firm under the name of JKL Associates. Okay, so this company has got independent auditor. Actually, here independent auditor is appointed under the Companies Act 2013. It also has a wholly owned subsidiary which is audited by another audit firm, JKL Associates. So JKL Associates, they are doing the audit of this wholly owned subsidiary. The engagement team has noticed that the company has maintained several bank accounts and there is substantial movement in the fixed deposit. So they have a several bank accounts and there is a substantial movement in what you can say in the fixed deposits. That's the thing. Substantial movement is there in the fixed deposit. That's the thing actually here. Okay. So now this is the thing here. So engagement team has noticed that company has maintained several bank accounts and there is a substantial movement in the fixed deposits during the year, leading to the risk of misstatement in cash and cash equivalent. So there is a possibility that there is a risk of misstatement in cash and cash equivalent. The engagement team has planned procedures regarding the same. At the planning stage, the engagement partner is also trying to set materiality for the financial statement as a whole. Okay. So engagement partner means it's a auditor. Okay. Now the following is the information extracted from the financial statement. Revenue 100 crores, total assets 40 crores, then profit after tax 8 crores, total liabilities excluding equity it is 30 crores. Okay. So this is the number they have given. As I told you, my dear soldiers, that let us follow a part read, part solve approach. So once you read a part of question, so here they are talking about materiality, they are talking about the auditor, they are talking about what you can say the one issue or that they are maintaining several bank accounts and there is a substantial movement in fixed deposit. That's the thing here. So there may be issue in cash and cash equivalent. So now, so what they have done is that so because they are noticing a ROM in the cash and cash equivalent. So cash and cash equivalent, they are looking at ROM. How do you deal with this? So what do you do actually in this case actually here where you have an issue which is related to the cash and the cash equivalent. Okay, that's the thing actually here. So now they have given some numbers. These are all benchmarks. Benchmark means it's a basis on which you calculate the materiality. An item is said to be material if it influences the economic decision of the user of the financial statement. Okay. For example, say a company having a turnover of 10 lakhs, for them 1 lakh is material. A company having a turnover of 10 lakhs, for them 10 rupees may not be material. Okay. So now, what is the question based on the limited facts we have read? The auditor of the company are in the process of establishing audit strategy. Which of the following is not a relevant factor in establishing the overall audit strategy in the given scenario? See, audit strategy refers to scope, timing and direction of audit. Scope, timing and direction of audit, and it helps in development of a detailed audit plan. Okay, so you decide what to check, when to check, how to check, and development of a detailed audit plan. Okay, so now my dear soldiers, that's the thing here. So first of all, consideration of 5 branches which are audited by independent auditors. That's the thing here. So now this is the thing here. So consideration of 5 branches which are audited by independent auditors. Consideration of wholly owned subsidiary audited by another audit firm. Expected time of holding AGM in accordance with the provisions of Companies Act 2013. Nature, timing and extent of planned procedures for cash and cash equivalent. So what is the audit strategy they should establish? So In overall audit strategy, do you consider 5 branches which are audited by independent auditor? Yes. So you always consider actually. Then you consider the wholly owned subsidiary audited by another audit firm? Yes. Because see, how many units are there, how many locations we have to do audit, it is a part of strategy. So yes, we consider that. Expected time of holding AGM, because AGM helps us to know, because the audit report should be well before AGM, and that's the whole idea. Okay, so the timing of the reporting. So what is the timing of reporting, that you have to consider. Okay, so while audit strategy, you understand the nature of engagement by understanding the timing of audit and the nature of reporting you are doing. So what is the communication you do? That is why reporting is important. But the last one, nature, extent, timing of planned procedure for cash and cash equivalent, that is not a part of audit strategy. Why it is not a part of audit strategy? Because it's a part of audit planning. See, you have first preliminary engagement activity. Okay, there you decide whether I should take up the audit or not. Second stage is the overall audit strategy, which sets the scope, timing, and direction of audit. It does not talk about the audit procedures. Third stage is audit planning, where you talk about the audit procedures, you talk about the nature, extent, timing of risk assessment procedure, and further audit procedure. That is why D is the right answer. Okay, so 6D is the right answer, my dear soldiers. Let us move forward. For priority limited, which benchmark would the engagement partner most likely to use for setting materiality for the financial statement as a whole? For financial statement as a whole, if you see, we can use percentage of revenue, percentage of total assets, percentage of what you can say the profit before tax, and percentage of total liabilities. Generally, profit before tax is something which is taken to set the materiality for the financial statement as a whole. That is always a topmost priority. The least most priority is the percentage of total liability, because profit indicates the entirety. Because of your economic activity in the year, what is the profit generated? It is an impact of all the items which is shown in the profit before tax, and that is why C is the right answer. Eighth one. In the given scenario, assume that the engagement partner has decided to increase the tolerable misstatement to 10 lakhs. While designing the sample described, select the correct statement. So, tolerable misstatement is to 10 lakhs. What do you mean by tolerable misstatement, sir? See, tolerable misstatement is a concept which we learn in SA 530 audit sampling. Tolerable misstatement is a monetary amount set by auditor, and which where the auditor obtains an assurance that the actual misstatement is not exceeding the tolerable misstatement. Means what? See, up to 10 lakhs misstatement is acceptable. It's tolerable for me. Anything which goes beyond 10 lakhs is not tolerable for me. That is the thing actually here. So when you increase the tolerable misstatement, means okay, earlier my tolerable misstatement was 5 lakhs. Now I am increasing my tolerable misstatement. So what happens when you increase the tolerable misstatement, my dear soldiers? Automatically the sample size will decrease, because what will happen, you are increasing your misstatement, means up to 10 lakhs you are not bothered, so above 10 lakhs you will see, so automatically there will be a shrink in the sample size. Sample size means the quantity of the sample. Now let us look at the option. So while increase in the tolerable misstatement, it would lead to decrease in the sample size. This is what I told you actually. Okay. So A is the appropriate answer, but let us see B, C, D. It would lead to increase in sample size. No, completely no. It would have no effect on samples. No, sir. Sample size will be affected. It is not possible to draw inference on sample size due to increase in tolerable misstatement. No. Tolerable misstatement means how much misstatement I can tolerate. I can bear. Means up to 10 lakhs if there is a mistake, okay, no problem, no issue. That is what it is trying to say. So I think A, what I told you earlier, A is the right answer. Okay. Then that's the thing here. So I think I just skipped the question. Oh, question. Let us complete the question first. We should have read this first. Okay. Anyway, while designing a sample for verifying revenues of company as a part of test of detail, the engagement partners determined tolerable misstatement for 5 lakhs in order to address the risk that the aggregate or individual immaterial misstatement may cause the financial statement to be materially misstated and provide a margin of possible undetected misstatement. So earlier the tolerable misstatement was 5 lakhs. Now is increased to 10 lakh. Means earlier if the mistake is up to 5 lakh, no issue. More than 5 lakh, it's an issue. But now statement up to 10 lakh, no issue. Means what? When you're increasing the amount, what is happening? You're reducing the sample size. One newly joined engagement team member has a little conceptual understanding of tolerable misstatement, which I already explained you, determined by the engagement partner. He also has no idea of the effect of change in tolerable misstatement on the sample size. Definitely, sample size and tolerable misstatement are interlinked. See, if the expected misstatement increases, then sample size also, my dear soldiers, increases. If the expect tolerable misstatement increases, then sample size will decrease. Okay, that's the thing here. During the course of audit, while performing test of details means what? You check the transaction with the documentary evidence. I repeat again, whenever you check the transaction with the documentary evidence, that is called as test of detail. The engagement team has come to certain misstatements in selected sample pertaining to verification of revenues. The team has projected that the misstatement to population of revenues. So, team wants to comply with standards on auditing strictly. See, what is test of detail? You check the transaction with the documentary evidence. Okay, so the engagement team means articles are audit staff. They came across some misstatement in selected sample pertaining to verification of revenues. The team has projected the misstatement to population of revenues. That's the thing actually here. So okay, that is the thing here. So now the team has projected the misstatement to the population, and team wants to comply with what you can say with the standards on auditing strictly. Strictly, they have to want to comply with the standards on auditing. That's the thing actually here. That is SA 530. Now, so let us see what is the question based on that. While performing procedures on design sample, engagement team identified certain misstatement in the selected sample and projected these to entire population according to requirement of standards on auditing, which statement is correct. Anomalous misstatement is auditor's best estimate of misstatement in the population. No sir, no sir, that is not a best estimate of misstatement. Projected misstatement plus anomalous misstatement, if any, is the best estimate of the misstatement in the population. Now, this making sense. It is making sense. See, you found a misstatement in a sample. Out of 10,000 items, you selected 500 items. You applied the audit procedures, that is test of control and test of detail. After test of detail means you check the transaction with the documentary evidence. After applying test of detail, what happens? Here, you have to project that misstatement, what is there in the sample, to the entire population. So, best estimate of misstatement in population will be a combination of projected and anomalous mistake. Anomalous means some misstatement which is not representative in the population. Okay, so B seems to be right answer. Let us say C. When projected misstatement exceeds tolerable misstatement, sample provides a reasonable basis for conclusion about the tested population. No, sir, no. That is not the thing actually here. It does not provide any conclusion actually. That's the thing here. When the projected misstatement, anomalous misstatement exceeds the tolerable misstatement, sample provides a reasonable basis for conclusion about the tested population. That's the thing here. So here the B is the more appropriate answer actually, that a projected misstatement plus anomalous misstatement is a best misstatement in the population. Very, very high quality question they have given you for testing. Amazing question they have given. Okay, good, very good. So now let us move forward. Let us go ahead. Okay, so we'll see you in the next discussion.